Good morning, well-informed listener. Today's Wednesday, 20th August, 2025. And welcome to your daily news update on Blip Brief, small but almost everything updated daily. Our mission, simple, really. Cut through the noise, give you the essential, the intriguing, sometimes surprising facts. Everything you need on the global and Indian economic scene, plus top world events from just the last 24 hours. Think of it as your shortcut to being genuinely clued in, minus the overload. Okay, let's dive in. We're unpacking market movements, big policy shifts in India, global geopolitics, and like always, we'll finish with a pretty fascinating science breakthrough, something to chew on.
Absolutely. It's definitely a packed 24 hours to look at. And
Yeah.
seeing how these things connect markets, policy, global events, that's really key for making sense of it all daily.
Totally agree. So let's kick things off with the pulse of the Indian markets. Yesterday, another positive day. That makes 4 straight sessions of gains for Indian equities. The BSE Sensex closed at 81,644.4. That's up 370.6 points or 0.5%. And the Nifty 50 hit 24,980.7, gaining 103.7 points, 0.4%. So the immediate question, the one that really jumps out is what was driving this sustained upward trend, especially after it felt like things had cooled off a bit not so long ago.
Right. And this market strength, it isn't just a sort of broad everything goes up rally. It's more strategic. We're seeing a fascinating mix of things. There's definite sector-specific relief, money moving into areas tied to, say, domestic consumption, infrastructure build-out here in India. That's happening alongside, consistent government support through policy. And crucially, strong institutional inflows are still coming in. Put it all together, and you get this resilient upward push. It signals real confidence in India's, its longer-term path. Now, looking at this morning, the GIFT Nifty is down about 40 points, so maybe a cautious start today. But the advice floating around is still that buy on dip strategy. Basically, if prices dip briefly, consider it an opportunity, especially if the Nifty holds above that key support level, 24,800.
Okay, that 24,800 mark. Got it. That really helps clarify the underlying dynamics. Let's drill down into some specific companies, the movers and shakers, because they really highlight these trends. Top gainers yesterday, Tata Motors jumped 3.6%. Adani Ports and Special Economic Zone up 3.2%. Reliance Industries gained 2.8%, and Hero MotoCorp climbed 2.7%. Tata Motors, for example. There's a lot of buzz around their commercial vehicle discussions, right? That links directly back to that infrastructure theme you just mentioned.
Exactly. Ties right in. On the other side, the losers included Dr. Reddy's Laboratories, down 1.5%, Bajaj Finserv off 1.1%, and Cipla slipped 1.0%. These shifts often show that sector rotation in action, money moving around.
But here's where it gets really interesting, I think. Peeling back the layers on some of these corporate stores, like D-Mart. You hear this phrase going around, D-Mart is dead, long live D-Mart. It sounds totally contradictory. What's going on there?
Yeah, it does sound odd, doesn't it? But it's kind of a classic short-term versus long-term view, the dead part. That usually comes from looking at maybe slowing same-store sales growth and obviously the competition, online retailers, other discount chains. It's intense. But then the long-lived D-Mart bit, that points to its fundamental strengths, things that haven't gone away, like their super efficient cost structure, really strong brand loyalty with their core customers, and crucially, still a huge runway for expansion, especially into India's Tier 2 and Tier 3 cities. So yeah, there are headwinds now, but the underlying business model, analysts see it as resilient, still lots of growth potential, just maybe not the hyper growth we saw in its early days.
That makes sense. A great distinction. And then you have something completely different, like HAL, the whole pingers to hypersonic narrative. That feels like a really powerful signal about India's defense growth, almost a national story.
Oh, absolutely. HAL's transformation, it's not just about building things. It reflects India's whole ambition for self-reliance at Manarbar, in defense and advanced manufacturing, and this links neatly into new investment opportunities, too. Take Jefferies, for instance. They've just started coverage on the newly listed HDB Financial Services. With a buy rating, they're forecasting a pretty significant 19% upside, aiming for a target of Rs 900 per share. Why? Well, they like HDB's strong loan portfolio and its really low cost of funds. They're expecting, get this, 18% AUM growth and a 16% return on equity by FY28. So that shows real confidence in parts of the financial services sector, especially the well-run, diversified lenders.
And we're seeing some smart financial moves from other big players, too, aren't we? Strategic stuff.
Indeed. There are strong whispers about Reliance Industries potentially getting an S&P Global ratings upgrade. That would be a major nod to their financial health, their strategic shifts. And another example of smart financial management, Vinycore. They make auto parts. They're refinancing about 800 crore of high-cost debt. The goal, to cut their interest costs by a third, down to under 15%. That's a really significant move. Frees up a lot of cash for future growth, innovation. Pretty vital in the competitive auto sector.
Definitely. And what about the IPO scene? That's always buzzing. We've had some interesting ones lately and talk of big changes.
Yeah, the IPO market, it's always dynamic, kind of a barometer for investor mood, really. Tata Capital's IPO is certainly one people are watching closely for the second half of 2025. Lots of analysis out there already, like 8 things you must know type articles. Meanwhile, Vikram Solar's IPO, well, it was subscribed 1.52 times on day one. Sounds okay, but its GMP, the gray market premium, actually slipped. So some mixed feelings there among pre-market folks. Contrast that with Patel Retail. Their IPO was subscribed 6.39 times on day one, much stronger. And its GMP surged 18%, shows real retail interest. We also saw Bluestone Jewelry's debut described as lackluster. It listed at a 1.35% discount, though reports suggest it did recover a bit later in the day. But maybe the biggest potential shift on the IPO front longer term is SEBI possibly easing rules for what they call mega companies. This could smooth the path for a huge listing like Reliance Jio, maybe needing only a 2.5% share float. That would really change the game for these massive offerings and make it easier to go public.
Right. So if we stitch all this together, the market moves, the company stories, the IPO action, what's the takeaway for the broader Indian economy? The currency, for one, seems to be telling a story of confidence.
That's a great point. The rupee has seen a really significant surge. It closed at 86.9550 to the dollar, after even briefly touching 87. That's its highest point in August. And what's fueling it? Well, optimism around those indirect tax reforms we're expecting, plus a big drop in crude oil prices that helps India's import bill directly. And then there was that sovereign ratings upgrade, the first since the global financial crisis. That gave it another boost. It all points to positive sentiment driven by growth policies and renewed foreign buying. International confidence seems high.
And speaking of those tax reforms, the proposed GST changes, they sound like they could really make a difference for everyday people. Potential cost drops of, what, 8% for small cars, 5% for big cars? And groceries, electronics getting cheaper too, that's huge for household budgets. Real relief.
It absolutely is. And look, while the government expects a revenue hit maybe over 60,000 crore annually, the longer term thinking, the strategic gain is getting more small businesses into the formal economy. That boosts transparency, efficiency, overall growth. It's a trade-off. Beyond that big policy stuff, other positive signs too. India's natural gas import bill was down 9.4% in April-July. Good for energy security, trade balance. Also, CapEx loan releases to states already crossed 40,000 crores. Shows that infrastructure push is ongoing, robust, and maybe a really strong sign of confidence from investors. Private credit investments surged 53%, hit $9 billion in just the first half of 2025. A big chunk of that was Fortis Investments' record $3.1 billion deal. This private money is filling gaps left by banks and NBFCs, showing a really dynamic financial system adapting.
Okay, let's pivot now. Shift focus to the global stage. Because, wow, from Washington to Delhi, tariffs are really making waves again. We're seeing former President Trump's renewed threats impacting everything from pharma stocks right down to our own e-commerce here. And the White House confirmed yesterday those earlier sanctions imposed by Trump on India, doubling tariffs to a huge 50%. He explicitly said back then it was to deter Russia regarding Ukraine.
Yeah, the scale and potential impact are, well, they're significant. Those 50% tariffs, they're projected to affect something like $48 billion worth of Indian exports. And Moody's Analytics put out a stark warning, saying they could derail India's growth ambitions. That's strong language. And there's a human cost, too. Experts are warning about 3 lakh jobs potentially at risk across certain sectors, particularly those really reliant on U.S. exports. Plus, another hit is coming. The U.S. de minimis exemption that let low-value shipments enter duty-free that ends August 29th. The expectation, a 15-25% drop in India-U.S. e-commerce shipments. And that's going to disproportionately hurt small businesses, individual sellers relying on those direct sales.
That's a serious headwind, definitely. But I seem to recall hearing something that kind of challenges this narrative about India maybe not being the tariff king it was sometimes labeled as.
You're right, there is that nuance. It's interesting. A money control analysis actually showed India ranks below countries like Sri Lanka, Thailand in terms of tariffs on U.S. goods. So yeah, it does challenge that old tariff king idea. And even with the existing 25% tariffs, Tata Steel's India operations seem to be holding up well. Resilience shows their domestic strength, their efficiency. And on a slightly more positive trade note, perhaps, China has started lifting some curbs. On fertilizers, rare earths, even tunnel boring machines going to India, it might signal some trade realignments, maybe a slight thawing of earlier restrictions. Could open up new avenues.
Okay, here's where it gets really interesting on the global stage. The diplomatic maneuvering. Former President Trump saying U.S. troops wouldn't defend Ukraine, believes Ukraine can't get Crimea back or join NATO in any peace deal. And he's reportedly trying to set up direct talks between Putin and Zelensky. I mean, that kind of high-stakes diplomacy could genuinely reshape global security.
Oh, definitely. These geopolitical shifts, they send ripples everywhere, impacting economic stability, corporate confidence, and we're seeing worrying signs elsewhere too, like in the US. Corporate bankruptcies are soaring, actually surpassed 2020 pandemic levels, 71 filings in just 1 month. It really underscores the global economic pressure points right now, the fragility for some businesses. Then there's the tech side. The Coforge CEO had some interesting comments, said AI-led deflation is pushing clients to renew IT contracts at 30–50% lower rates. Ouch, that's really squeezing outsourcing firms. But he also said spending on transformational tech, adopting new stuff, AI that's actually rising. So it's not just cutting back everywhere, it's more like a shift in priorities. Focus on efficiency, future-proofing.
That's a really nuanced picture. So companies are adapting to AI, but it's clearly hitting the job market for newcomers too.
Precisely. The data bears that out. India Inc.'s fresher hiring intent slipped to 70% for the July-December period. And the reason cited, AI-led restructuring, plus those broader global uncertainties we've been talking about. Companies are just being more selective, more cautious with new grads, looking for specialized skills that fit this new landscape.
Okay, let's do a quick roundup now. A few more crucial updates from the last 24 hours. Kind of paints a broader picture of things impacting India. First, policy-wise, the Union Cabinet approved a bill for a total ban on online money games. Citing addiction concerns, financial losses, big move. Proposes penalties, aims to curb related cybercrime, strong stance. Then urban challenges, Mumbai, again, underwater, 200 millimeters of rain in 24 hours, red alert. The Lahiri subway flooded for the 24th time this monsoon. 24th, a nightmare for commuters. And, incredibly, a monorail train got stuck with over 200 people on board. Shows the disruption. Up north, Himachal Pradesh got hit too. Twin quakes, magnitude 4.0 and 3.3 in Chimba. Plus a cloud burst causing significant damage in Kulas Lagati.
Yeah, these events really highlight the immediate challenges, policy changes, adapting to them, and the increasing intensity of, well, nature.
And something a bit different. Reports suggest Indian Railways might go the airport route. Introducing luggage charges, fines, visitor passes could change the train travel experience. On the innovation side, though, really interesting. HDFC Bank made its first generative AI investment, funding Kurover, the Bengaluru-based creator of FarGPT. That highlights a real focus on AI tailored for multiple Indian languages. That's huge for accessibility across the country. Okay, now for our aha moment. A glimpse into science that could genuinely change things. Today, we're looking at a fascinating innovation coming out of Milan.
Right, this is pretty cool. What scientists there have done is create a first-of-its-kind single-atom catalyst, and it acts like a molecular switch for green chemistry. So imagine a tiny conductor. It's stable, recyclable, eco-friendly, and it enables cleaner, much more adaptable chemical reaction. Let me simplify that. Think of it like a master key for chemical reactions. It unlocks them, speeds them up, but doesn't get used up itself. The molecular switch part is the really clever bit. It means it can adapt to different conditions. Makes it incredibly versatile. This isn't just about being efficient. It's potentially a huge shift towards like on-demand chemical manufacturing. You could maybe produce drugs locally very specifically, or rapidly develop new materials with almost no waste. It could kind of democratize complex chemistry, make it way more environmentally friendly. It's a big step for sustainable industry globally.
Wow. Okay, so let's pull back. What does this all mean? The big picture. We've navigated global tariffs, India's economic resilience, pretty impressive actually. We've seen strategic market gains, and now this glimpse into a future of cleaner chemistry. It is a lot to take in, isn't it? The sheer speed of it all. Markets shifting, science leaping forward. It can feel, well, overwhelming. So here's a thought to leave you with. In a world where information, innovation just accelerates every single day, how does understanding the why, the reasons behind these rapid shifts, how does that empower your decisions, not just as a professional, navigating the markets, but just as an informed citizen trying to make sense of it all?
That's a really important question, isn't it, for all of us? It just underscores the value of constantly looking for those connections, the implications. Because knowledge, well, it isn't just about knowing what happened yesterday. It's about understanding what it means for what's coming next and how we prepare for it, adapt to it.
Keep diving deep. Keep asking why. Until next time, stay well informed.